Hi there, welcome to Neppy Invest. Only 4 more standalone Appendix 4C June quarter videos, including this one, which will be on Dynamic Drill and Blast. There's 2 main reasons I wanted to do a standalone video on this company. The first reason is I actually am a shareholder of this company. I'll try to leave my biases out as much as I can, but for full disclosures, I should mention that. The second reason I want to discuss Dynamic Drill and Blast in the one video is because they recently made an acquisition, and in my opinion, this acquisition was pretty weird, not because of what they acquired, but because the company they acquired was actually bigger or is bigger than Dynamic Drill and Blast. And typically, when a company acquires another company, the acquired company should be, or typically is, smaller than the company making that acquisition. So I'm going to discuss that acquisition in this video, also discuss their financial year 21 results and the Appendix 4C from the June quarter. Don't know if it's obvious or not, but Dynamic Drill and Blast is in the mining services sector. So this is all about drilling and blasting. In fact, I do own a few mining drilling companies. I'm not sure if I do have too much of investments in that space. That is something I'm going to have to think about. I do think because there's a lot of drilling companies out there, there is a potential for some consolidation. And I've already seen that consolidation with this acquisition that the Dynamic Drill and Blast have made. Now, they were founded in 2011, but sometimes if you just Google when was Dynamic Drill and Blast founded, it will come up with 2020, and that's when they listed. The parent company was founded in 2020, but the subsidiary was founded in 2011. I'm not sure if that makes sense, but this company wasn't founded when they listed because that's just ridiculous. Anyway, they did list on the 6th of August 2020. The managing director is Mark Davis, and he has a 7.5% stake in this company. And there is a bit of skin in the game with the directors and other people on the board. I think the other major shareholder is also on the board as well. So there's no real big shareholder, no massive funds in this company. The market cap, $49 million at 43 cents. This is post-acquisition. That's actually quite important. If they didn't make this acquisition, the market cap actually would be quite a bit lower than it is right now. And the ticker code of Dynamic Drill and Blast is DBB. Though the market cap of Dynamic Drill and Blast is post-acquisition, the financial year 21 numbers is pre-acquisition. So what I'm going to do in the next few slides is look at the numbers that this company would have reported if they had made this acquisition at the start of the financial year. And you can just see how larger, not how larger, but the company they acquired, which was Orlando, is actually larger or was larger than Dynamic Drill and Blast. So Dynamic Drill and Blast revenue of $22.5 million, which was up 48% from the previous year. They are operational cash flow positive and profitable by $2.6 million and $1.6 million, and have net cash of about $800,000. When you do look at some of the evaluation metrics like EV to operating cash flow, PE ratio, price to sales ratio, some of those might seem a little bit high, but just keep in mind that this is pre-acquisition and the market cap and enterprise value is post-acquisition. So you're not really comparing apples with apples, you're sort of comparing apples with bananas. The company that Dynamic Drill and Blast did acquire was called Orlando, and the information I'm showing you in this slide was taken just from one of Dynamic Drill and Blast's presentations prior to the end of the financial year. So some of the revenue they've provided for Dynamic Drill and Blast and Orlando, there is a range, so they weren't exactly sure how much revenue or EBITDA they were going to have for the financial year 21. But the main takeaway from this is Dynamic Drill and Blast and Orlando have seen revenue EBITDA grow over the past year, and Dynamic Drill and Blast is actually smaller or was smaller than Orlando. So for financial year 21, Dynamic Drill and Blast had revenue around 22.5 million, while Orlando had revenue between 34 and 35 million. And when you look at EBITDA, Dynamic Drill and Blast had EBITDA between about 4.5 and 4.7, while Orlando had EBITDA between 7.5 and 7.9. So when you combine both Dynamic Drill Drill and Blast, and Orlando, we're going to see revenue at around about 60 to 70 million, EBITDA well above 10 million. And with the market cap of only about 49 million or so, that does mean this company does look like it is at good value right now. Particularly when you look at the growth in both revenue and EBITDA for both companies over the past year. In fact, Orlando has seen EBITDA grow at 196% and their revenue growing at 44%, while Dynamic Drill and Blast has seen revenue growing at 48% and the EBITDA growing at 171%. So good growth, and if they can continue that growth over the next few years, again, this company is looking like fairly good value, but I just want to keep my bias out. So there are some risks involved with this company moving forward. There's always risk in drilling companies. We saw that, was it 5 years ago, where quite a few drilling companies did go bankrupt because we were at the end of the mining boom and mining companies didn't want any more drilling done. So these companies had all these rigs that weren't being utilized. And if they don't have their rigs being utilized, they will lose money and have the potential to going bankrupt. This is another slide taken from that presentation they released just before the end of the financial year. And this is looking at pro forma market cap, revenue, net asset position, and EBITDA. If you don't know what pro forma is, it's just calculating financial results using certain assumptions or presumptions. So those assumptions or presumptions here are if you combined, or this acquisition was done at the start of the year, these were or would be the financial numbers this company would have produced for this year. So the market cap right now about 50 million or just under 50 million. So the share price back then was a little bit higher. Revenue just under $60 million, EBITDA between 12 and 12.6 million, and net asset position at 39.3 million. Because just see how large, much larger this company is because of this acquisition of Orlando. The acquisition of Orlando by Dynamic Drill and Blast was actually completed in July. I think it was mid-July, 14th of July, if I remember correctly. So there's no Orlando numbers in the operating cash flow or Appendix 4Cs for the March and June quarter. So when we're looking at these numbers, this is all Dynamic Drill and Blast. There is no Orlando at all. But Dynamic Drill and Blast had receipts for customers of 6.3 million in the March quarter, and they were operational cash flow positive by $1 million. And because they weren't burning a lot of money in financing or investing activities, they did grow their cash on hand by $3.3 million. They also repaid $300,000 in loans and spent $330,000 on capital expenditure. Now let's have a look at the June quarter results for Dynamic Drill and Blast. The June quarter wasn't quite as good as the March quarter for this company. Receipts and customers had dropped or dipped a little bit to $5.8 million, but they were still operational cash flow positive by $683,000. One thing they did do during the quarter was they had a capital raising, raising $6.2 million, and they did spend $4.1 million on capital expenditure, and they received $3 million through loans. That meant they raised their cash on hand from $3.3 million to $8.7 million. Only 4 quarters of history for Dynamic Drill and Blast, and to be honest with you, as a shareholder, nothing too exciting here. In fact, receipts have been dropping through this period from 6.9 million to 5.8 million in the most recent quarter. But we only have a sample size of 4 quarters, so you can't really discern any trend just yet in receipts. So I always want to see what sort of trend there is in receipts, and typically I do prefer at least 8 quarters or 2 years of history, and more than likely, not more than likely, but definitely because they've made this acquisition of Orlando, the receipts in the September and December quarters will be significantly higher than these 4 quarters. So I don't think we can take anything away when we do see the September quarter simply because of this acquisition. Though I am a shareholder of Dynamic Drill and Blast, it is disappointing to see that the market doesn't care about this company at all right now. We do see the share price just drifting lower and lower on very slow shallow volume. So even this acquisition that I do think will be beneficial for the company and shareholders in the long run hasn't got the market excited right now. So this is a company that I do own in my long-term buy and hold portfolio, and there is that possibility that I do think there's going to be some consolidation in this space. We've already seen it with this acquisition of Orlando by Dynamic Drill and Blast, and it just might continue over the next few years where we see consolidation, and there is potential that Dynamic Drill and Blast might be bought out by another company, or Dynamic Drill and Blast might keep going down the acquisition route. So at this point in time, if I was not a shareholder, there's no rush to buy into this company until we see a little bit more excitement in the market around this company. And the best way to get excitement is some good financial news, maybe a really good September or December quarters, highly operational cash flow, a positive quarter, a good increase in revenues over the next few quarters. That sort of financial news will drive up the interest in this company and lead to the share price starting to rise. Only 3 more standalone Appendix 4C June quarter videos to go, and those 3 companies I'll be looking at in those standalone videos will be on Mosaic Brands, MCS Securities, which is another company I do own, and I've held that for the longest period of time, and Buddy, which was a bit of a surprise that they were operational cash flow positive. Haven't had a massive look at that company. I do know the share price has been under pressure over the past year or so. They did do a capital raising, and then when they finalized that capital raising, the share price actually did fall below the raising price. So really interested to have a look at that company. So join me if you do like this series when I look at these 3 companies in the next week. That's all I have for this June quarter Appendix 4C and financial year 21 results video for Dynamic Drill and Blast. If you do have any questions about this company or have any thoughts, any opinions, I'd love to hear them. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.